Let's talk about the ramifications of, mass money printing and all this stuff. I have the story from Axios, the wild ride of pandemic consumer prices. I find it interesting that they say it's the pandemic, right? Not as opposed to what's been going on in this country for some time. So we've looked at the M1 money stock quite a bit, and sometimes M2. I'm not. You guys would know better than I do, but you can see around 2008 there's a major uptick in the money stock, and then at the pandemic a massive spike. So I think this kind of stuff's been happening for a long time. But they show us laundry equipment is up 29%. Car and truck rentals, 24%. Major appliances, 19%. Propane, kerosene, firewood, 15%. Pork chops, 11%. Used cars and trucks are up 10%. Then there's weird stuff like women's dresses are down 14%. Public transportation is down 15%. Men's suits are down. Telephone hardware is actually down 20%, which is interesting. And airline fares have dropped dramatically. I think that's for obvious reasons. But just to point out, lumber prices have skyrocketed.
Yeah.
Steel has skyrocketed. There's a shortage of a lot of computer equipment. So we've been waiting now for over a month to get a new computer for the studio.
Right.
And we keep getting told from everybody, hard to come by, can't get it, sorry. It's been particularly difficult. Prices are going way up.
Yeah, they are, yeah. Well, and you mentioned computer components and the price they're saying is going down. But that's actually, if you dig into it, a lot of times it's a lie. For example, if the phone, they'll say it's twice as fast as the phone that you bought 2 years ago, they'll say that means that the price has dropped by 50%. Even though you still paid the same amount. You paid $1,000. They say actually it's 50% cheaper because it's twice as fast. And that's what they cook into their books. And then when the Bureau of Labor Statistics reports the CPI numbers, the numbers are cooked. They're rigged. To show an outcome that they have pre-configured. They want to show 1.6% or whatever the number is. And they do whatever they can to hedonically adjust these numbers to get to that number because they have an incentive to keep the reported inflation as low as possible.
All right, so I'm sure that you're both Bitcoin trillionaires.
Yeah, definitely.
At this point. But
we're in it for the technology.
But for the regular people, right? Regular people right now who have been working 40 hours a week, they've been getting paid, and they're watching people get paid $16 an hour on unemployment. Yeah. The people that are seeing all this stuff, the prices increasing, what do they need to know, and what do you think people should look out for?
Well, the inflation's here. It's a secular move in inflation. It's not going to be temporary. It's going to be now structurally baked into the economy, and prices are going to start to go up on a regular basis. And the reason why it wasn't as visible as it has been with all the money printing that has gone on is that essentially jobs were shipped over to China, and that kept the numbers low for a long time because there was no wage pressure. But now, since the middle class in China has equaled the more or less middle class in America, you don't really have that sink of cheap labor anymore. Right. So now prices are going to start moving up in reflection of their actual money supply numbers for real. And that's what people are seeing. So one key statistic, and this is true, is that once the budget of the average family, once they allocate 40% to food, that's when you usually see an insurrection. So we saw it in Egypt when the price got to 40%, there was a revolution. We saw it in France, the French Revolution, the food cost got to around 40%. In the U.S., for a vast majority of folks, we're now bumping into that. We're approaching that 40% number. Whoa. So that would indicate historically that you're getting close to a flashpoint where an insurrection would become historically the norm.
Wow.
You're also
that's scary.
Like really. All those things you're talking.
Say not really. Did you guys buy like a mountain bunker in New Zealand or something?
It's normal. I mean, things happen, and there's cycles.
Cycles happen, and the Thucydides trap, as you mentioned, that's going to lead to deglobalization. You're already seeing the deglobalization that causes prices to rise. You have the fourth turning. This young generation, the Generation Z, aren't going to. Do you think they're really going to give 80% of their wages over to the retired boomers? No, they're not going to, right? No, I wouldn't. They have the numbers as well, so they're going to, tell them to stick it. Then, in terms of the inflation numbers, we're at the end of that cycle as well. We're at the end of the dollar. The Triffin dilemma has reached the end game, and you see that with the extraordinary amount of money. I mean, Max and I have been reporting on the global financial crisis since 2008, 2009. And the stuff they're doing now is just beyond any of that, right? It's like if you look at the charts of the money printing and the interventions in the economy now versus 2008, it's beyond anything. It's so ridiculous. And yet we're still in the crack of boom side of it. Like things are like stock markets are at all-time highs, house prices at all-time highs. Like incomes are up 20%, over 20% in the last year for the ordinary American. Incomes are up 20%, most of it from the government transfers. So, these are crack up boom times and they're printing more and more. Like you're supposed to do the money printing. That the theory is under Keynes is you're not supposed to do that during the crack up boom times. You're supposed to wait for the crash, but they're not even waiting for the crash anymore.
Again, getting back to this Greenspan put or the machinations of the plunge protection team or the government in terms of markets is that they would not allow for a normal business cycle to take place.
Yes.
Where you have a downturn and then you get rid of, for example, the banks in 2008 were caught committing massive fraud. And so in a normal capitalist economy, a business cycle, those banks would have had to go bankrupt and we would have had new banks and new jobs. But instead they bailed out the creditors. They bailed out the banks. Again, historically, you never see that. Usually in a crisis like that, the debtors get bailed out. The people who are at the mortgages and the debit credit cards would get bailed out. Not the banks who made the fraudulent loans.
Right.
They got bailed out. And what they did with that, let's call it $16 trillion of bailout money when it's all said and done, is they simply were allowed to expand their credit card, expand their credit facilities, and do the exact same things that caused the crisis in 2008, but to do it 10 times to 20 times bigger or 20 times worse. And we've been saying now for 10 years that, what's going to happen in 10 to 12 years is going to be the 2008 crisis part 2. And that's exactly what we're in now. It's just the same crisis from 2008. The global economy died in 2008, but now it's getting buried.
Now it's like a lich. Is that how you say it?
Yeah,
like a lich.
that's one way to say it.
It's like an undead, like sort of reanimated corpse.
Well, how many zombie companies are there in the United States? Something like 30% of the S&P 500 are companies that can't really afford to pay interest on the debt that they carry on their books from their earnings. They're technically zombies. They're dead companies. They're the walking dead. And that's like a third of all the S&P 500. And they're just kept alive by free money printing. It's just like money, 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 money. What's Amazon just announced today? That they're going to float billions of dollars worth of bonds. Guess what? To do what? To buy back their own stock is what's going to happen. So here again, it's 0% money for some, which is incredibly dangerous. For example, when Amazon bought Whole Foods, it was accretive from day one. They cost them nothing. They bought it for nothing. When Tiffany was bought by LVMH in Europe, they bought Tiffany. How much did they pay to buy Tiffany, a multi-billion-dollar company? They paid exactly nothing because the European Central Bank lent them all the money they needed. The central bank to buy Tiffany's with no interest. They gave them Tiffany's as a gift. They're already the biggest luxury company in the world.
It just kind of sounds like fascism.
It's a corporatism.
But also, it's important to point out that in the past year, we've done fiscal stimulus. So since 2008, it's been just Federal Reserve stimulus, and that's credit to the banking system. So it's not cash. This is cash. This is what they've been printing. The trillions of dollars that the U.S. government is printing, that is high velocity, real money. That is what causes the big inflation. Yeah.
Right.
So is this why you guys were saying buy Bitcoin? Like back in the day?
We were gold bugs in 2011, and then we were introduced to Bitcoin, and we immediately realized that this was digital hard money. I have a background in virtual currencies going back to the mid-90s. I created the Hollywood Stock Exchange, I invented a digital currency in 1996. I have a patent on that digital currency. So I immediately recognized that this could do what we were trying to get that to do back in the mid-90s. And so we went from gold over to Bitcoin, and it's kind of like when Dylan went electric.
So we're gonna have to come back to this conversation. So put a pin in it because we got breaking news. Lydia just pulled this up. This is from Bloomberg Law. Is this from Bloomberg Law? Mm-hmm. Yeah. Gas stations running dry as hacked pipeline tries to restart. So
we were worried actually on the drive up here because I was like,
guys, we've got this little bunker, we put some cots in there, we got some hammocks, and there's beans.
That's right.
And we got a lot of MREs just because they're fun. You ever them.
But do you have MRE gasoline?
No.
Can I put it?
I do have an electric car.
Okay.
And my van is solar powered. So in the apocalypse, I can actually plug my electric car into the solar power from the van.
Yeah,
and probably about 2 or 3 weeks, you'll be able to drive the electric car.
Well, look, this is a function of too much debt. So the infrastructure is breaking down. And yet up until a few years ago, you had this just-in-time economy where things were logistically all connected. You had globalization, and you had this incentive to keep all these systems going at the absolute rock bottom, cheapest price, and to not pay anybody anything in terms of a decent wage. But once the Thucydides trap kicks in, once the U.S. dollar loses its status as world reserve currency, then it reveals all of the shortcomings in the system, and it reveals all the fragility in the system. And there's suddenly no way to repair these infrastructure projects because the money's being sent out directly from the Treasury to appease the rabble-rousers from staging an insurrection. I mean, this is what they do in countries where the population's about to insurrect, is they try to throw money at them to appease them. And that works for a short period of time, and then it doesn't work.
So how much time do we got left?
Well, every time you read a story like that, like, we ran out of microchips, so the cars aren't being delivered. Oh, gas lines not being restarted, can't get gas. Oh, the price of food is now 40% of my weekly budget, right? You add all those data points up, and every day you get new data points. So it's tough to say exactly when the pot boils, but it's
Frogs in a pot.
It's happening.
But I say get ready for good times because, this stuff has to end for the next generation to have their way, right? To have a
the
better
night is
times.
always darkest before the dawn.
Yeah, it's good for millennials.
And
Millennials
that
are going to have a
the
great century.
And the Generation Z, who are like 25 years old now, the oldest ones, and that in terms of those microchips, you had been talking about cycles and the business cycle that used to exist when Max and I were, your age. We had the business cycle, and the thing about the semiconductor chips is they never planned. Nobody expected the money printing, like the fiscal stimulus, right? So what happened is naturally these business executives saw a pandemic, saw global lockdown, and they canceled their orders. They said, we're not going to need those cars because we're on lockdown, right? Nope, they didn't expect the thousands and thousands of dollars to be thrown at everybody and everybody to go on a buying spree. So There were backlogs. Like all these auto companies had canceled their orders expecting that things would be slowing down. And across the board, computers, phones, all of that stuff, everything that you use as a microchip, they were not expecting so much money.
It sounds like there's two things I'm kind of hearing from what you guys are saying. The first is that there are people who decided the ship's sinking. Extract as much as you can before it goes down and bail yourself out. But the other thing is, I mentioned the fascism thing, because when you say like the central banks are giving this money to like Amazon to buy Whole Foods or whatever, it sounds like the government is surreptitiously empowering massive corporate monopolies to seize power.
Totally.
It's not even the government, it's a private corporation. These companies have no oversight. The Federal Reserve, the Bank of International Settlements.
Well, because this is why they say that the inflation is, let's say, running at 1.6%, even though if you were to calculate inflation as you would do under the Clinton administration and without using all these hedonic adjustments, inflation actually right now is running 10 to 12%. That's the real number.
10 to 12%.
That's what is really happening.
Is that per year, per dollar?
Per year. So but now they say it's 1.6%. So why do they openly lie? Because for two reasons. The COLA adjustments, the cost of living adjustments for Social Security, so they save about $70 billion a year by not paying out what they should be paying out because inflation's going high, the Social Security benefits. But the primary reason is that by saying that inflation's running low, and in fact claiming that there's deflation, they can justify lower interest rates that are near zero, which are what powers all the consolidation. The Tiffany being bought, Whole Foods being bought, mergers and acquisition. And when I said earlier about infrastructure crumbling because of all the debt, to finish up on that point a little bit, it goes back to private equity, what private equity does. Private equity can borrow all this money at near 0%, and buy entire companies, entire industries, and strip out all the assets and keep the profits, like Bain, the Bain Capital, Mitt Romney. That's what's where he comes from. We saw it in the movie Wall Street in the 1980s, right? They were doing leveraged buyouts, as it was called.
So what does that mean? What is that?
That means that if you have a company and you want to buy that company, what you can do is, and I was working on Wall Street when this really became huge, is that you can pledge the assets of the company that you don't own to borrow money. And then you borrow the money and you buy the company that you previously did not own. And now that you own it, you start to sell the assets off, the pension fund, the overfunded pension account, the real estate, they fire everybody. And what's left, and you pay down the debt that you borrowed, and you keep what's left. which could be $100 million or $500 million. That's called leverage buyout. And it was really pioneered by Mike Milken during the 1980s, because he wrote a paper when he was at Wharton where he figured out that the lower grade debt outperforms high grade debt. So he said, you know what, why don't we just do original issue low grade debt? So Ron Perlman and all these other corporate raiders, as they were known, they went to Mike Milken, they borrowed billions, they did leverage buyouts, they bought these companies, and they stripped them, they sold all the assets, and they became billionaires. Well, over the last 30 years, that's become bigger and bigger and bigger. And so the private equity market, like Warren Buffett is essentially a private equity firm. He doesn't invent anything, he doesn't do anything, he never worked a day in his life. He just borrows money cheap from the Fed, strips companies. He's an asset stripper. That's all he does, and he's overrated as a performer. If you take out the bailouts from the Warren Buffett performance over the past 30 years, he wouldn't be beating a money market fund. He's the most overrated money manager in history.
So people like to say, when we're talking about IRAs or metal or Bitcoin, this is not financial advice. The first thing
No.
I want to ask you a question.
I haven't
before
given
do.
any financial advice on this program, Tim.
So I just wanted to ask real quick, like why is that? Why do
I would
people-
never do that.
Why would people say this is not, like, why do people do that?
Because you have to be licensed to give financial advice.
And so people can interpret what you're saying as advice. Is that what it is?
Yeah, because then they could claim that you were offering advice and they lost money, let's say,
you're
and then
liable.
you're saying, okay, you gave me unlicensed financial advice.
But you've mentioned that people should buy Bitcoin, haven't you?
Yeah, because I'm saying Bitcoin is a substitute for gold, and it's a substitute for the dollar. This came up recently because a lot of journalists are saying they don't write about Bitcoin because they consider it to be a conflict in some way, because they don't own it, Bitcoin. They wouldn't own Bitcoin or write about Bitcoin, et cetera. But we're talking about a substitution for the base layer of money from dollars to Bitcoin. So it's not a financial advice. It's about advice about how to reconfigure the entire economy, the United States economy, the global economy, on a Bitcoin standard. And so we've been saying this since it was $1 back in 2011. And we also talked about gold. If you talk about gold, gold is an intricate part of the global financial picture. So countries buy gold. The central banks own 30,000 tons of gold. You talk about gold, you could say you own gold. It's an inflation hedge. Here's a way to inflate against inflation is gold. So Bitcoin is the new gold. It's digital gold. It started in 2011 when we talked about it. So we're making that point that this is what it is, and that's what we've been saying.
The reason I ask is because you mentioned inflation was actually at 10 to 12%.
For real, yeah.
Which shouldn't that make people act as though their pants are on fire, kind of freak out? That's scary.
They should, and the people who have, with the price of Bitcoin at $55,000 per coin is telling you that the U.S. dollar right now is in a hyperinflationary collapse against Bitcoin. That's
Right.
what the price is telling you. Bitcoin is really the only market in the world that's allowed to trade freely.
Thanks for checking out this clip from the Timcast IRL podcast. If you want to see the full show, come back to this channel, youtube.com/TimcastIRL, Monday through Friday at 8 p.m., where you can leave comments and super chat, and we actually will read your comments on the show. Don't forget to like, share, subscribe, and if you want exclusive members-only content, segments you can't get anywhere else, go to timcast.com, become a member, and we even have full bonus episodes. Thanks for hanging out, and we'll see you all next time.